if you're trying to invest 2 to 3 billion a year, you need to cover more or less a certain spectrum. Yeah, we've had great experiences with hotels. I think we now own, what is it? I think 48 hotels globally. So that will be and will remain one of our focal points. And it's also, indeed, we started investing into budget hotels 4 years ago when things like Motel One were on nobody's list. So we've had a long-standing track record, and I think, as far as I remember from my colleague who runs the hotel business, it's even more relationship-driven and structure-driven in the sense that you have to make sure that your leasing/management contract, because we need leases rather than management, and the hotels would prefer management to leasing. It's a partnership with these chains. Let it be a Motel One, Amelia, a Barcelo, Hilton. Those are the concepts that we run, and I think our team has done a fantastic job of being able to find ways to structure with these partners. And I think those are the relationships you need to get into that segment. But generally, again, we cannot drop any part of the market or the location. So we've been buying in B locations in Germany for the last 15 years and have rolled that out even stronger with a new fund that concentrates solely on Germany over the last 3 years, where we've bought in Bremen, where we've bought in Hanover, where we've bought in Osnabrück, so in cities that maybe nobody's ever heard of here, but which work very well, which I've never heard of in Germany either. Yeah? And you'd be surprised how many cities there are, over 150,000 inhabitants. You then, of course, look at the pure strategy of going into high street locations, which are extremely stable, or you take the best assets in those cities if you could do office. That's our strategy, and we've done that very, very nicely so far. Logistics is proving difficult to really buy, to buy at a price that still makes sense, at least in Germany. The French numbers look different. We just lost a bidding process where the pricing was almost at a factor of 18 for a logistics site. So you're at what is that, 5.25, 5.15? Logistics, 10-year DHL contract, in like logistic is in the middle of nowhere. Where you really wonder at the end of these contracts, you don't have a lot of value left except for land and a shell. So that's a worrying trend, but it's something that we've done quite a bit. We have about 800 million of logistics. We would like to expand that. We've got a good expertise in it, but it's proving very difficult. Also in Poland and in France and the Netherlands to access that capital. And it's simply driven by the fact that there's so much money out there that the competition is immense. It's just every marketplace now is crowded. And we've had these chats for a while now. And 3 years ago, I felt it's getting a bit crowded in the room. Yeah? Now you feel like you're in the metro in Paris at 8 o'clock in the morning. Yeah? And it's just but the train's not moving. So it's a really bad feeling, and it's dark around you as well. Yeah? So it is a bit of a worrying idea. On the other hand, if on the long-term view, if equity is as cheap as it is at the moment, and we all believe that it's going to stay that way for the next 4 to 5 years, it looks like a sound play. Yeah? But having invested for 16 years of my life, the prices just seem a bit over the top. And even though everybody comes, and that's the one thing I find a bit worrying, because Marcus, you put it up on the chart earlier, it's the big yield spread, the spread between fixed income or bonds and real estate. Yes, it's a historic high. Not necessarily out of the markets for real estate, though, not driven by that, but driven by misfunctioning markets on the government side. So to then say, well, look how good value real estate looks, just because one of the comparatives dropped to an historic low, is that really a pro-real estate, or is it just a I have no alternative argumentation? And I think a lot of money going into these markets, hence why it's being driven by players who don't understand the real estate market. And if you don't really understand the real estate market, you will price through some risks that you should be pricing in, and you will, silly things will happen on these markets, potentially. And that worry is a little bit there. But indeed, if you take a long-term view, 3% now sound good. Yeah, I mean, 8 years ago, 3% would have sounded ludicrous. But back to your question, where we see value in what we're doing, indeed. So retail will, if we can, we'll continue doing it, both high street shopping centers. department stores, etc. So the whole scale, which Henrike Waldburg, my colleague, does exceptionally well. Hotels, of course, as well. My sectors of office and logistics, yes, absolutely. And high street, which my team does as well, absolutely.